Santosh Rao and Angelo Zino join us. Thanks so much for joining us, gentlemen. Santosh, I'll start with you. Clearly, significant cost-cutting measures being enacted here. Do you welcome those, or do they worry you a little bit? These are sort of costs 12 months ago that I think people would have been amazed that they can say they can strip out.
No, absolutely. I think this quarter was all about cost management and positioning for the post-COVID world, the second half of the year. And I think they're doing a great job. I think not much was expected this quarter. We just wanted them to hold the line, which they did. There were a lot of challenges, and Uber told us that already. So I think they're doing a great job. And their targets are still on track. So I think all said, I think they're on track. They're doing very well.
Angelo, do you feel like Uber Eats, currently a benefit for Uber, will become a kind of anchor to their numbers again in the future? Or is this now a bit of luck that Uber will always benefit from?
No, I mean, we definitely love the diversification of Uber here. As far as kind of their delivery business, at the end of the day, I mean, I think that's really kind of the name you really want to be pegged to. I mean, it's really tough here. And I know Lyft highlighted the fact that, looking for adjusted EBITDA profitability by late 2021, I think it's very difficult to tell because you have no idea what the regulatory environment is going to look like. You also have no idea what the recovery is going to look like in terms of, post-COVID ID world. Although we do believe, getting to 75% of those volume is attainable. But we'd rather be more exposed to kind of that delivery business where we see some significant, secular opportunities there.
Yeah. Let's talk about the regulatory environment, Santosh, because it's not favorable for them right now, like Uber facing this big issue in California where lawmakers want them to classify their drivers as workers. How, as an investor, do you expect this to play out? Can the economics work for an Uber or a Lyft if they have to do that?
No, I think the way the judge wants it, I don't think it's going to work. But there's going to be a lot of back and forth. We'll see how it plays out. It's going to be a lose-lose proposition if it passes, because the drivers lose the freedom and the income also to some extent, and the users, the riders, will lose the service, the quality of service, and the price, because the prices will be passed down. So I think the whole value proposition of this ride-sharing companies will go away. So I think there will be a lot of back and forth. Hopefully, Prop 22 will pass and in favor of these companies, and it'll come down, and people will realize that in the end, it's for the good, and there should be a paradigm shift for this new economy, and the laws need to be adjust to the new reality.
Angelo, if lockdowns lasted longer than any of us want, how many months are we talking runway and wiggle room that both these companies have?
Well, in terms of the financial, capability of these companies, clearly Uber is more than capable of, lasting a prolonged kind of downturn. In terms of Lyft, I mean, we've seen them kind of burn some significant cash here over the last 2 quarters. They also raised, a ton of cash here in the most recent second quarter, which allowed them to actually increase their cash position quarter over quarter. But that being said, I mean, if we're looking at a prolonged downturn or a shutdown, I mean, there's a real possibility where, you're looking 8 to 12 quarters out where, you could potentially see Lyft run out of cash. But, we don't think that's, really a likely scenario. But that being said, clearly Uber is in a much better financial position than Lyft is here over the long term. And I'd also say this, when we see downturns like this, what you typically see happening is the strong get stronger, and the weak often, tend to get a bit weaker if we were to see that protracted downturn.